it is. It is day 5 of spring school. Can you believe it? I'm so happy to be here. It's me, Megan, and Mr. Accounting himself, Mr. Ashraf. How have you been?
Good, Megan, and you?
Fantastic.
Haven't seen you in some time.
Yes, I know. I know you accounting students have missed both of us. Hey,
Yes.
say yes.
Yes, yes,
Thought
yes.
so. But what are we doing today? Do you know?
Yes, we do. Today we're doing 2 sections.
Mm-hmm.
We're going to do VAT and we're going to do stock valuation systems.
Is that like the 2 sections they struggle with, or why did you pick them?
We just chose them because we need to cover these sections. The stock valuation one is definitely a question that appears in every matric paper.
You
So
see, here
there's-
to learn more and learn extra. So let me just tell you where to get everything. And I will be on the Facebook page, that is facebook.com/learn extra. And to download the notes that we're going to be doing today, it's a different website, so take note, www.learnextralive.co.za/spring school. And now for the big resistance. We are doing a competition, guys. So let me tell you what it's called. It's called Stop the Clock. So Ashraf and I are going to try and explain this because I'm trying to get into the works of things. So how it works is you choose a lucky number and it's only allowed to be digits. So 1, 2, 3, 4, 5, 6, 7, 8, 9. And that how you win is if you choose a number, because you know our page has likes, obviously. So if you choose the last digit of our likes, let's say you choose 2, and it becomes 2 when we stop the clock, then you could be a winner. All you have to do is I've posted a link on the page. It's got a picture and it says Spring School Day 5. So you tag your lucky number or you share it on your Facebook wall. So I'm going to ask Ashraf, what number have you chosen? Do you know?
Megan, I'm going to choose a 7.
A 7. Is there a
Yes.
reason you choose a 7?
I don't know. It's just to me,
Just 7.
just a 7.
Seven.
Let's
Okay,
just go
but-
for 7.
But let me just tell you, you don't know. That number changes all the time. Every time you refresh the page, it changes. So you must tag all the friends that you think also want to have that lucky number. The number I'm going to choose today is going to be 5, because it's my dad's lucky number. Well, it was. But anyway, so how it's going to work, the winner will be announced at the next show, which is at, I think, 2 o'clock. But I'll let you know the winner is going to be drawn by our very own Mr. John. And if you've tagged yourself and followed the correct steps, you could win yourself a Mindset Lucky Hamper. So I think we should get into today's lesson.
Okay, so Megan, what we're saying is you've chosen 5.
Yeah.
I've chosen 7.
Yes.
Our viewers can choose anything from 0 to 9.
Yes.
Because remember, this digit at the end is going to be the lucky digit.
Yes.
And as you said, it's going to change and change and change.
All the time.
All the time. So guys,
Choose
go
your
for
number.
it. Keep on with your likes and make sure that you are that lucky winner.
Yes.
So all of you will then get drawn into a pool, right?
Yes.
All the 7s. I'm sure the 7s are going to win.
All the 5s are going to win too.
Okay. So they will then get drawn into a pool.
Yes.
And then eventually we will choose.
Lucky. The numbers, the people, when we stop the clock, the people who've chosen, let's say, like I said, 2, let's say they chose 2, and all those names are there, those will be our lucky winners.
Okay, 7s. Here we go.
Let's start the day off. Let's go.
Right, guys. What are we doing? We said we're looking at inventory valuation and VAT. Now, if we start off by saying that, here goes. The first question that we have to complete is on VAT. Now, let us just do a little bit of VAT before we go into the actual questions. Understand that VAT has implications for you on a daily basis. Every day you're buying items and you have to pay VAT. Remember, the VAT that you are paying will be collected by the VAT vendor, who's the trader, and eventually the VAT will be paid over to SARS into the state coffers, and then we are hopeful that those state coffers would then benefit Joe Citizen, you and I. So you can see the importance of accounting. Megan, we always say accounting is a life lesson.
Why do you say that?
Watch now. You pay VAT on
Yeah.
goods that you pay for, isn't it?
Sadly.
And it applies to you in your daily
Everything
life.
you buy,
So
yeah.
that's why we're saying accounting is a life lesson, guys. You don't have to go and study accounting in the future, assuming you're not going to do accounting further, but still, it's going to be applicable to your life on a daily basis.
That's
so
right.
that's why we're saying, take note of our lessons. Important for life, accounting. Right, now, we always hear the word VAT, right? The question says, now, we have to choose our, there goes, the letters VAT. What does the letter VAT stand for? What does it mean? Remember, VAT is an acronym. So the acronym is value.
We're
Where
drawing in
have
arrows.
I've got something.
Let's write with arrows.
There's it. We got it now.
Got it.
Okay, let's just erase that. Okay,
Yeah.
doesn't matter. It doesn't want to erase. Let's pick up our pen and let's go for value added tax. That's what VAT stands for. So immediately you can see that the word VAT is an acronym, right? And it stands for value added tax. By the same token, remember, very often we use this acronym and we use it, which is permissible to use in accounting, because certain abbreviations are not allowed. But this one is allowed. Which one? When we talk about SARS, what are we referring to? Remember, another acronym that is used linked to VAT, South African Revenue Services. Remember, that's the agency that collects the taxes in South Africa. Right. Now, next question. In South Africa, VAT is levied at what percentage? Come on, guys. Like I said, it applies to you on a daily basis. Therefore, you should know that your answer here is 14%. Right? Obviously, this 14% is what we refer to as the standard rate of VAT. Now, once again, let me show you different rates of VAT. I'm sure you know what I'm talking about. Are you sure you know what I'm talking about? Remember, the standard rate on VAT, as we know it, is 14%. But you also get certain items that are rated at 0%. Why? Because you have certain items that fall into the category of being zero rated. Examples of these are brown bread, mealie meal, rice, vegetables, etc. Why is this done? This is done in order to make sure that to accommodate for the poorer people in our communities. And therefore, you would find that items fall into the category of being zero rated. So understand this, that when you have sales, you could have sales of normal items, standard rate of VAT, namely 14%, and you can have sales of zero rated items. On those sales, there is no VAT. Keep that in mind, because examiners often use this to test to see whether you know whether an article falls under zero rated or it falls under the standard rate of VAT. And then there's one more category of VAT, and those are your exempted items. Remember this, accounting boffins out there? When an item falls into the category of exempted, it means that it will never ever have VAT on it. Transport, international transport, and transport generally is one item. You do not have VAT on transport. Education is another one. Okay, so look at the categories that we've discussed. We've discussed the standard rate, which is 14%. We've discussed the zero-rated items that have... Now, the zero-rated items, depending on the Minister of Finance, you could have, as the economy improves and a country's economy improves to such an extent, they could move items from the 0 into the 14. However, the third category, the exempted items, will never ever have VAT allocated to them. Okay, so you've learned quite a bit about VAT. The next question. VAT that is collected by a business on the sale of goods and services is regarded as, here the examiners have given you a choice, is it VAT input or is it VAT output? Right, remember the question. The question says, VAT that is collected by a business. Remember, we are the business, we are the VAT vendors. When we're collecting the VAT, right, that is the VAT that we have to pay over to SARS. So this is VAT on sales. And VAT on sales is VAT, both are VAT. We have to choose the correct answer. And the correct answer is VAT output. Understand that VAT output refers to the VAT on sales. This means that all the VAT that we have collected as a VAT vendor, that's the amount that we have to pay to SARS. Understand that. That money does not belong to us. We merely act as agents on behalf of SARS, collecting the money from them and then paying the money over to SARS. So VAT output is related to sales. Okie dokie, next one. In the ledger, a debit or a credit, again you have a choice. Balance on the VAT input or VAT output account, right? It reflects the final amount that must be paid to SARS. Right. Remember, if you are owing money to SARS, then it means that it is a liability. Understand this, grade 12s. Once you have collected the money from the end user, for example, you've sold goods to Megan, she has paid you the VAT does not belong to us, we have collected it from her, that money needs to be paid over to SARS, and as a result, we now have a liability. Okay? It's something that we owe. Who do we owe it to? We owe it to SARS. So watch here. It's a credit balance because it's a liability, number one. So we're saying a credit balance, right, reflects the final amount that must be paid to SARS. Now remember this here. You have three VAT accounts. One is your VAT input, which is an asset account that reflects all the VAT that we have paid and we owe it to SARS. Number two, you have a VAT output account, which is your liability that reflects what we owe to SARS. These two are transferred into your VAT control account, and therefore what we are saying is that eventually if your VAT control account reflects, we want to show the amount that must be paid to SARS, meaning the amount that we are owing SARS. In this case here, you can see that a credit balance on your VAT control account, here's it here, your VAT control account, if there is a credit balance in this account here, this reflects the amount of money that we owe to SARS. Clear? So, on the other hand, grade 12s, if your VAT control account reflects a debit balance, what does that mean? Is that possible? Yes, it is. Yes, it is. Let me explain by means of an example. Let's take a situation where we are starting up a business, right? So for the first 2 months, we're basically just buying goods and we're not selling because we're stocking up our business. So in those 2 months, what have we done? We have paid the VAT that SARS owes to us. We haven't sold goods, the business is not open as yet. Therefore, your VAT control account shows you a debit balance. What does that mean? That means that you now have to claim back that money from SARS, and SARS owes us that money. Now remember one more thing. We are saying here that if your VAT control account has a debit balance, it means that it has to appear under trade and other receivables. Please make a note of that. Don't take for granted that your SARS VAT control account will always have a credit balance. It could have a debit balance as well. And if your SARS VAT control account has a credit balance, that means it will be found under trade and other payables because it is a liability. Right, so you can see very few questions on VAT, but we've done a thorough explanation around the concepts that are examinable. So make sure, guys, we almost to the end of this session, Megan.
Okay.
We're going to have a break, I think.
Ooh, okay, yeah.
And don't you stray or go away. The place to be is Mindset Learn.
Oh, Ashraf knows how to say it. Okay, mindsetters, we'll go grab a glass of water and we'll be right back. Welcome back, Mindsetters. We are here with Megan and Ashraf on our spring school day. Day 5, guys. Let me just remind you, go look on our Facebook page, facebook.com/Learn Extra. I've posted a very exciting thing about our competition, which is Stop the Clock. So go have a read. I'll tell you more about it again later. And I just want to congratulate Bongani Baloyi because he got question 1.3 right, which was VAT output. So congrats, and let's go forward with some spring school.
Okay, guys, welcome back. Remember, we're busy with VAT. We're looking at all the different angles that examiners normally use. Now look at the next one. Very interesting question. It says here, an item of stock is purchased for 26,200. Remember that that is your purchase price, excluding VAT. Okay? And I think the show would not be complete without me writing this acronym for you guys. And remember, you have to read the full question. We will not use an expletive, Megan. We won't use the angry word.
Yes.
We just say, read the full question. Remember, 26,200.
I only clicked now, so I
Okay.
can read. Oh, don't do that.
Don't use that word. All right? Okay, remember, 26,200 is your price excluding the VAT. What does the question want from you? The amount of VAT on this item. What is the VAT amount? So very simple, guys. What do? Watch this here. We say 26,200 and we multiply it. What is the VAT rate? Okay, your VAT rate is 14%. So take your 26,200. Let's get our calculator out there. And 26,200 times 14%, and my answer is 3,668. So here goes, 3,668. What is the 3,668, grade 12s? That is the value of your VAT. Remember, that was the exclusive price. We added the 14% to it, and that's our answer. Voila, 3,668. Why the calculation? Now watch this calculation. Once again, I used 14%, which was my VAT rate. Now, with VAT, there are certain calculations that you need to master. What are these? Look at the next one, and it will give you a better example. We are asked to calculate an item of stock is sold for 39,900, including the VAT. There's it. Including, operative word, including the VAT. The amount of VAT on this item is what? Now notice a change in my calculation. Why? In the first question, the amount was excluding the VAT. If you recall, there's it. But in this one here, the amount includes the VAT. A totally different question, right? What is it that you want? You want the VAT amount, okay? So you say 14% over, remember what you want must be on top, Megan, not inside, on top. Right, that's the 14%. Okay, now, what is given to you? What figure do you have? You have the 39,900, which includes the VAT, therefore grade 12s. Watch this here. I'm going to break it up just for explanatory purposes. Notice, it's your normal selling price of 100 plus the VAT of 14 to give you a total of, therefore, calculation 14 over 114. Okay, so let's do the calculation. And my calculation is 39,900 times 14 divided by 114. And my answer is 4,900. Notice that in this calculation, I used a totally different formula. Why? In the previous one, I used 14 over 100 because it was exclusive of VAT. Now, I'm using 14 over 114 because it is inclusive of VAT. Remember one more thing. Let's finish off VAT with just one more thing that I need to explain to you guys. If you were asked to determine the original selling price of the goods without the VAT, what would your calculation be? It would be 100 over 114 times, obviously, the selling price that is given to you. And here you use the actual selling price. Megan, you want to know how to remember that?
Tell me.
Ashraf Patel.
Aww.
Okay,
That's
guys.
why he's so good at accounting. He makes his own acronyms.
So what you need to know is that whenever you are doing a calculation, ask yourself, what is required of me? What is it that the examiner wants? Do they want the selling price? Do they want the VAT? And that's how you use these ratios to calculate your VAT questions that are given to you. That's it, Megan, for VAT.
VAT
Done
over.
and dusted.
Okay, what's next? Inventory.
Okay, now we come to inventory valuation. Now remember, very often you find grade 12 accounting students. I like to say accounting students, Megan, because sometimes we have grade 11s watching us.
Sometimes, yeah.
Yes, and sometimes these sections are applicable to them as well. All right, the VAT, the calculation part of it, definitely they should have been able to answer that question.
Yeah.
So what we are saying is that although that question was adapted from a grade 12 exam paper, a grade 11 candidate could have answered all those VAT questions because it involved work that they do in grade 11.
So
we are encouraging our grade 11s also to watch Mindset Learn.
Yes.
Because it's going to make a difference to your accounting results.
Yes, Ashraf.
Okay, got it.
Got
right. Now, when it comes to inventory, accounting boffins out there, remember, let us first distinguish between stock systems. Now, stock systems are stocks, for example, when we talk about perpetual inventory system, you and I know that perpetual inventory system refers to keeping a record of stocks, a running record. In other words, you keep a record of the sale as well as the cost of sale. Okay, I'm just doing this by means of an introduction into the question. At the same time, the other system that is used extensively by smaller businesses is what we refer to as the periodic inventory system. Periodic inventory system, remember, no cost of sales account, right? Both these systems have pros and cons. They have their advantages and disadvantages. And very often in an exam, you find a question that comes up and says, what's one advantage of the perpetual inventory system? Or what's a disadvantage of the periodic inventory system? So, my brief to you is engage your past papers and you would find these types of questions propping up so you can then answer these questions as well. Okay, now with stock valuation, remember, we've done stock systems. Now we come to stock valuation or stock validation. That means, what's the value of my stock? Two systems that you need to know. One is FIFO, first in, first out, and the second one is weighted average. Right, Let's get right into our question now. What are we told? You are provided with information relating to Highveld traders for the financial year ended the 28th of February 2013. The business is owned by Anel and managed by Chris, okay, who is responsible for running the shop. The business buys and sells cricket bats and cricket balls. So immediately you can see two items are being dealt with here. We're dealing with cricket bats and we are dealing with cricket balls. Okay, what is required of you? Always go through your question paper. Highlight, underline, so you know exactly this is what the examiner expects of me. Another tip, a top tip from Mindset Learn. Megan, the moment you receive your accounting paper, and you would find that it's compulsory in every school for them to give you reading time.
Yes.
Right? During the reading time, with regards to the accounting paper, now specifically guys, with regards to the accounting paper, in accounting, you are given an answer book, right? In the 10 minutes reading time, my advice to you is use it to peruse the accounting answer book. Why? Because clearly you can see that in the answer book you would see calculate the number of units or the value of in other words, put it simply, the cricket bets using the FIFO method. So in the answer book, the table is given to you with the calculation. So you're focused immediately. You're not having to read through the multitudes of information in the question paper. The answer book tells you in question 1, da-da-da-da-da. This is what I need. In question 2, I'm expected to do income statement, balance sheet, whatever else may be. So in that way, what you are doing is you're setting a mindset. Okay, this is what they want in 2, 1, 2, 3, 4, 5, 6, whatever. And another top tip, guys, don't do question 1 first.
Why not?
Because you have an answer book. And Megan, your favorite section, I know, is the cash flow statement.
Oh, yes.
So, cash flow statement is question 4.
Okay, so I
Which
should
rule
start there.
says that you have to do question 1 first?
No rule.
Absolutely. Once you do question 4, which is the cash flow statement first, you're on a high. You're on an accounting high.
On a roll.
Exactly. You know why? Because you enjoy the section, you're into it, and everything's working out. So in that way, you're psyching yourself up for maybe something challenging somewhere else.
Later. Okay.
So if you do a section that you don't like first, and for whatever reason, we're talking about cricket balls here, you are batting and your middle thumb flies out, immediately you're on a low.
Yeah.
Do you know what I'm saying? So do the question that you like best first. Right. So you can see, on Mindset Learn, we also give you examination tips, how to go about answering your accounting paper. Right. What do we have to do here? In this one here, we expect to do the calculate the value of the closing stock, right? Show all workings, use both the number of units and the value of the units to calculate the cricket bats using the FIFO method. Okay, now, immediately I say, let me go into my information and see what do I have. Look at this here. Here's my cricket bats. So here's my focus. My focus is on cricket bats. Right? What do they want me to do? They want me to calculate the value of my cricket bats using the FIFO method. What is the FIFO method, grade 12s? First in, first out. Okay, so if we look at this here, let's go to the question, and we have to find our question. I'm sure it's here. Okay, we can work here, it's fine. Yeah, there's it. Okay, what do we know about the FIFO method? With the FIFO method, what is important is, Megan, you have to listen to this.
Okay.
With the FIFO method, the secret to the FIFO method is bottom up.
Bottoms up.
Not bottoms up. Watch the use of the word the bottom. I'm saying bottom up, not bottoms up. Okay, right. What do we mean by bottom up, guys? Look at this here. In your information, you are told that, look at my purchases. I bought in May, August, November, January. And what are we saying? We are saying that the secret to the FIFO method is bottom up. So when I start my calculation, I'm going to start at the bottom of my table and work myself up to the point where I cover the number of units. So, you want to know more? The place to be is Mindset Learn.
You ready for a break?
Yes, we are.
That a cue for break? Okay, I get it. Get something to snack on, Mindsetters, run to the loo, and Ashraf and I will be back right after the break. Welcome back, Mindsetters. You are here with me, Megan, and Mr. Accounting. I'm so impressed to see how many of you are doing the shares for our competition, how many of you are doing the comments for our competition, and safe to say the number, when I refreshed it, was 9. So we'll see at the end of the show what number the stop or clock stops on. There we go. I was going to say stop clock, but that makes no sense. Anyway, we are here doing inventory. And I want to say Mulalu, he said, I'm glad you are doing inventory evaluation today. It is one of my small challenges in accounting. So we are so glad we are here to help you learn more, learn extra here on Mindset Learn Extra. Do you want to start?
Yes.
A little bit? Okay, let's
Thank
go.
you. Let's go for it. Thanks for those lovely comments, guys. Yes, those small challenges would be sorted out after this lesson. Make sure that you listen to us, that we have your mind, your body, and your soul. All 3 components. Be with us, and definitely we're going to make you an accounting star. Right. Okay, remember, what are we calculating? We are calculating the value of the inventory using the FIFO method. Right, a quick refresher. What did we say? We said that the secret to the FIFO method is bottom up. So, I know that in terms of my information, I have 175 units left over. So now, I now need to account for those 175 units. Watch. Obviously, the 100 units that were bought in January, those units are left over. Okay, so immediately I say, fine, take the 100 units, and if I take my 100 units, I say, fine, I'm accounting for 175, starting off with 100 times. What was the value of those units? Once again, let's check our question. It tells us here that these units were valued at 625 Rand per unit. However, there's something else that we need to take into consideration. Watch. Carriage on purchases. What do we know? The total amount of carriage on purchases paid was, for cricket bats, 30 Rand per bat on all purchases, and not included in the purchase price in the table above. So immediately you know that this price here that you have calculated on, which one? The 625, excludes, guys, the carriage. And therefore, you need now to include it in order to calculate the value of your trading stock. Remember, what else do we know? That any expenses on our purchases would increase the value of my stock. Therefore, 625 plus 30 is the value now of one cricket bat. Once again, watch this closely. It is the 625, which is the purchase price, plus the VAT. What VAT am I talking about? VAT. Sorry, guys. Carriage and purchases. I got VAT in the back of my mind because we did VAT initially. Once again, let's refresh. We're saying the purchase price of 625 per cricket bat plus the carriage on that of 30 Rand to give you a total of 625 plus 30 is 655. So therefore, we say 100 times 655 Rand, and we can do that manually, but let's take our calculators. 655 times 100, and my answer is 65,500. Okay, what have I accounted for? I have accounted for only 100 bats. Okay, now, the total number that I need to account for is 175. So it's another 75 bets that I need to take into consideration. Now, going back, let's look at my information again. Remember, we dealt with this 100, done and dusted, we sorted out the 100. Now, which other bets do I have left over? What did we say earlier on? The secret is bottom up. So if you've done with 100, you move to the next category of purchases. Now, obviously, that was 250 cricket bats, but we don't need 250. We only need 75 of those. Right, 75 at what price? 600 Rand. Okay, what have we learned from our lesson earlier on? That the cricket bats, there's an amount of 30 Rand per bat on all purchases, and these are not included in the purchase price in the table above. Therefore, watch this here. So what do I say now? I say, fine, of the 250, I'm only going to work with 75. Therefore, 75 times. What's the value? The value was 600 Rand. Okay, but I needed to bring in the VAT amount. Again, VAT. Sorry, guys. 600 Rand plus the carriage amount. Okay, so there's the 600 Rand plus the carriage amount of 30 Rand to give me a value of 630 Rand. I think why I keep on saying VAT, Megan, is because this thing keeps popping up in front of me. The question was on inventory and VAT. But anyway, let's look at it here. Here's my answer. I said 75 times 630 Rand. Okay, and let's go to our calculator. We said 75 times 630, and my answer is 47,250. 47,250. Once again, let me add my two components, plus 65,500, and my answer is 112,750. 112,750. And voila! What has happened? You have got the 5 marks for this particular question. Right, in summary, what do we know? In order to calculate the FIFO method, we start bottom up. We accommodate the total value of stock in terms of what we have on hand. Remember, in this price here, remember to add in the carriage if it is not included. That's it. Guys, the FIFO method of valuation of stock. Okay, Megan, do you want to give me a minute, 30 seconds?
30 seconds for?
You can just say something.
Can I speak?
Yes.
Okay, cool. Thank you, Ashraf. Ashraf is taking a little break, Brian Setters, and I'm going to tell you about the competition just to refresh your memory. So, what we have going here on Mindset is a stop the clock competition. And how it works, if I can try and explain it, it's better to go on the page, which is facebook.com/learnextra, but I will try and explain it. So, what happens is you're going to choose a number from 0 to 9. Not 11, not 13, not 25, 0 to 9. And if that number is your lucky number, let's say 1, then according to the amount of likes we get on the page, aka let's say 1, the last digit is a 1, then you could win a mindset hamper courtesy of Mindset here at the studios.
7777.
5, 5, 5. We've been having a little competition. And let me just quickly tell you what the, it's 1, and I didn't even look. So, number 1, let's see, tag it on. There's a little picture I've posted. Tag or share your lucky number, and you could be a winner here on Mindset Learn Extra. Are you ready?
Thank you, Megan.
I did my 30 seconds of speaking, and now it's over.
Okay, guys, remember, second question, what are you expected to do? You are asked to calculate the value of the cricket bats, the cricket ball, sorry, and the question says, calculate the value of the closing stock of the following stock item, namely your cricket balls, so a different stock item. Use the weighted average method. Right, totally different method. Let's look at how we go about doing this one here. Remember, you've dealt with averages. You hear this continuously in your classrooms. What do we mean by averages? Now, what's the secret? Because everything seems to have a secret in accounting. So, what's the secret for weighted average? Add values plus units. I repeat, add values and divide by units. Let's do that. Okay, going into my question, immediately I say, my emphasis is now on cricket balls. Right? Start off. What was the value of my stock at the beginning of the financial period? Immediately I say 19,200. Can you see what I've done? I'm starting with the opening stock of cricket balls. And the value of those cricket balls was 19,200. Therefore, in my cricket balls, I start off by saying 19,200 as my opening stock. Watch the method. Watch the method that I go about in answering this question. Very often, you know what to do, but it's just with your method you seem to have challenges. So start off with the opening value of your cricket balls. Right. Number 2. Now go to the purchase of cricket balls. What was the value of the cricket balls that were purchased? Here it is. Watch. Again, emphasis on cricket balls. Right? Remember, this is the purchases information they're giving you here. During the financial year, this following stock items were purchased. Refer below to returns and carriage. Important. Right. So, in terms of my purchases, what was the total value of cricket balls that I purchased? There's my value. Right? And the total value was 63,900. Immediately, I say, fine, take that figure into consideration and say, plus 63,900. What have I done? I've brought in the total value of goods in terms of the cricket balls that I have purchased. Right, now, what else do I know? In terms of my information, here it is. What do I know? Returns during the year. What did I return during the year? During the year, I returned 40 cricket balls. Right? And what am I looking for? Remember, I'm at the moment working with values. Got that, grade 12s? I'm busy working with values. So, the total value of cricket balls that were returned was 5,300. So immediately this means that, taking this into consideration, because I'm working with values, I say minus 5,300. Okay, so now once again, watch what I've done. 19,200 was my inventory at the beginning of the year. In other words, my opening stock. plus the 63,900 was my purchase of cricket balls, and this 5,300 was my return. Obviously, if you are returning the cricket balls, you have to subtract it off the value of what you had. So once again, opening stock, 19,200. That's the cricket balls that I had in my business at the beginning of the year. During the year, I purchased more to the value of 63,900. And then I returned to the value of 5,300. Now, grade 12s, we've worked with one component only, and that was the value in rands. But as the story unfolds, you got to wait.
And see.
And see what happens.
Until after the break. We'll see you mindsetters right after this. And we're back, mindsetters. I hope you're enjoying the show. Let me know if you're enjoying the show, but to me it seems that you are, because you're posting, and hopefully one of you lucky mindsetters can win in our competition. Don't forget. Someone asked me to give them a shout out, and that is Lance Kupeta. Thank you for joining in and watching Accounting with Mr. Accounting himself. Let's get back into our question, 2.1.2.
Thank you, Megan. Right, guys, a quick recap. What have we done? We're working the weighted average method. We've got all our values of the cricket balls. Now what do we bring in? Remember, those values are represented by units. That's right. In other words, the 19,200 value, how many cricket balls was that? Let's take a look and see. Here it is. 19,200, number of units, 320. So immediately I say, fine, go into my calculation, 320, can you see, representing the 19,200. Plus, the next item now is my 63,900. What do I look for? The units. How many units were there that we had purchased? Remember, the emphasis is on cricket balls. Here it is. And the number of units is 840 cricket balls. Right. Therefore, here we got 840. Again, notice the layout. Opening stock, number of units. Purchases, number of units. Remember the returns. Okay, 5,300 minus how many units did we return? Let's find that out. The number of units that were returned, where it is, number of units, 60. So therefore, in my calculation, minus 60. Right, we got that. Brilliant. Now what do? Now we take our calculator and we say 19,200. Okay, so let's clear that. 19,200. Let's go back. 19,200 plus 63,900 minus 5,300 is equal to 77,800. Okay, that's the first part of my problem sorted out. 77,800. And what do I divide it by? It was 320 plus 840 minus 60 is equal to 1,100. Immediately I have this figure here of 1,100. Remember, representing the units. Therefore, 77,800 divide by 1,100, and the value is 70 Rand and 72 cents. 70 Rand and 72 cents. Okay, that is the unit value of each cricket ball. Now what do? Multiply this by the number of cricket balls that are left over, and the number of cricket balls that are left over is 220. Therefore, multiply that by 220, and what do we find? Times 220, and my answer is 15,560. Okay, 15,560. Voila! What do we have? We have the value of the cricket balls in terms of weighted average. Once again, let us recap this entire calculation. Starting with your values. Take all the values of what? Opening stock plus purchases minus returns. Watch, here it is. Opening stock plus purchases minus returns. Let's take another color. Right, watch this here. Then the next step is you work with the units. Units of opening stock, units of purchases, minus the units of return. And then you just go ahead with the calculation, complete the calculation, and you have 15,560 as the value of your cricket balls using the weighted average method. Okay, done and dusted. Next question. We have to calculate for the value of the cricket bats, calculate the following. One, the cost of sales. Right. Now remember, when you are calculating the cost of sales, you are using, in other words, what we refer to as the periodic method. Okay? Now, in order to do that, we're going to start off by saying the first thing that I have to work out using my cost of sales is I'm working with cricket bats, so I start off with my opening stock, okay, plus my purchases, okay, plus any expenses that I have on my purchases, like carriage on purchases. So what am I actually doing here? I'm using what is called the periodic inventory method. Starting with opening stock, plus my purchases, plus my carriage on purchases, less my closing stock, and that will then give me my cost of sales. Okay, let's get into our information so we can identify what we need. Here it is. Remember, the focus is cricket bats. The value of my opening stock at the beginning of the year will be 49,500, right? That's the stock at the beginning of my financial period. So immediately I say, right, 49,500. Here's my 49,500. And let me get to my question. There it is. 49,500 is the value of my opening stock of what? Of cricket bats. Plus my purchases. What's the value of the goods that I purchased? Right? Here's my cricket bats. Remember, the total value of my cricket bats was 310,250. So 310,250 as my amount. 310,250. That's my purchases. And remember, the purchase price did not include my carriage. Therefore, what do I now do? Get the information regarding the carriage. What do I know about the carriage? I'm told that the total amount of carriage on purchases paid was as follows. Cricket bats, 30 Rand per bat on all purchases not included in the purchase price in the table above. So therefore, take your 30 Rand and remember 535 was the number of cricket bats that were purchased. So 535 times 30. Let's get that figure. 535 times 30, that's my carriage, which equals to 16,050. So therefore, plus my 16,050. So once again, grade 12s, what am I doing? I'm taking my opening stock of cricket bats, plus my purchases of cricket bats, plus my carriage on purchases. Just at this point here, let's just talk about other expenses that you may have, not in this question in particular, but other types of expenses that you could incur on purchases. What are they? Customs duties, import duties, freight inwards, etc. So look out for these when you are working with a question of this nature. These are other expenses that could be included in my carriage, or as an example, carriage in this particular question was carriage on purchases. At this point here, I have to make you aware of a red herring. Don't get caught out. What am I referring to? The moment in a question of this nature where you pick up an item that says carriage on sales, immediately, Megan?
Yeah.
Immediately, what you do is delete it, because it has no impact on the calculation. Examiners give it to you just to check whether you know that carriage on sales does not impact on any way on the calculation of my cost of sales. In other words, carriage on sales is where I pay to deliver goods to my customers. That has nothing to do with the purchase of my goods. Okay, so coming back to our question, opening stock plus purchases plus our carriage on purchases. Add those three components together. Let's do that. We've got the 16,050 plus 310,250, 310,250, which was my purchases, plus my 49.5 as my opening stock. Okay, I've got all the components there, is equal to 375,800. Okay, what is the 375,800? The 375,800 is the total value of my goods that I had available for resale. Now notice, in this particular question, there was no return of cricket bats. Therefore, no return is taken into consideration. Minus what? Come on, grade 12s, you should be shouting out the answer. What must I subtract from this here? From this, I must subtract my closing stock. Now, this is something that we've calculated already, haven't we? Let's see if we have this figure. Let's find it, because we calculated it, didn't we? The closing stock of my cricket bats was 112,750. So therefore, 112 minus 112,750. What is this here? This is your closing stock. Now I'm going to show you why in accounting we are very kind-hearted people.
I think so.
You agree with that?
You're a kind-hearted man.
Let's assume, for whatever reason, if you have made an error with this calculation in a previous calculation, this would then be awarded what we call a method mark. So there's no double penalty for you, Megan.
That's good.
Right.
I used to call them bubble marks.
Exactly, yes.
Yes.
We refer to them as method marks, because it's based on the method that you've used in a previous question in order to arrive at that answer. So here's my question again. 375,800 minus 112,750, and we got our cost of sales to be 263,050. 263,050. Voila, we have cost of sales. Okay, that's how you go about calculating the cost of sales. Right, next question. In the next question we are told, calculate the gross profit. How do we calculate gross profit? You've done this over and over. It's second nature to you now. What is gross profit? Let's determine it. It's sales minus cost of sales. Right? Let's see what information we have. Regarding my sales, Do I have information? Yes, I do. There it is. My sales during the year, total value 398,125. Okay? That's the value of my sales. 398,125. Therefore, 398,125. Once again, did I not calculate the cost of sales? Certainly I did. What was my cost of sales? Remember, my cost of sales was 263,050. So, 263,050. 263,050. And here's my calculator. 398,125. 398,125. That's right. Minus 263,050. 263,050 is equal to 135,075. 135,075. What is that? I've now calculated my gross profit. What is gross profit? The difference between sales and cost of sales. Over to you.
Are you ready for an ad break, Mindsetters? I think it's time, because after the break, we have something exciting, and I'll leave you with that. See you right afterwards. Welcome back, Mindsetters. That was our last ad break before the end of this accounting show. We've been here for about, okay, well, it's not an hour and a half, an hour and 15 minutes, and now, I think you guys will know what time it is. Need a little drum roll in the back. They're going, "Arrrr," because now, Mindsetters, we are going to stop the clock. I'm going to hand over to Ashraf, and we're going to see which Mindsetter won the fantastic hamper here at the Mindset Studios. Who could it be? Ashraf?
Right,
Yeah, they're
Megan,
going
let's
to draw.
stop the clock.
Oh, and the lucky number is 6. So, Mindsetters, if you tagged, shared, or said, commented on the picture, your number is 6, you will go into a lucky draw, and you could be the winner here on our fantastic show on Mindset Learn Extra. So, don't forget, there's another show at 2 o'clock. I'll be here. And if you think you know what your lucky number is, and if you can tag it and you think you could win, I'll be at 2 o'clock again. So, stop the clock. The number is 6. Ashraf has refreshed and spoken. So, for the last few minutes, let's get into accounting.
So, Megan, in other words, to get lucky,
Yes.
they had to come between you and me.
I know. It's actually ridiculous.
Isn't it?
I chose 5.
5, I chose 7. So for them to get lucky, they had to come between us.
That's so
What
sad.
comes between 5 and 7? 6.
Yeah.
Anyway, guys, to those of you that chose 6, well done. Remember, you go into the draw. And like Megan said, there's another show and another opportunity.
You could be it.
Okay, right, back to the accounting. Where's the accounting? Here we go. Right, what's our next question? In the next question, it says there that Anel is concerned that a number of cricket bats have gone missing. Trouble. Now, she says, calculate the number of cricket bats that appear to be missing. How are we going to do that? Very simple. We start off by saying, what is the number of cricket bats that we have in our inventory at the beginning of the year? Remember, the emphasis is on cricket bats. So, we had 110 units at the beginning of the period. Therefore, we start off with 110 units. Remember now, we are talking units. The number, the physical number of cricket bats that we had was 110. Right. And certainly during the year, we purchased. How many did we purchase? Let's get that one. During the year, we purchased a total of 535 units. Therefore, we say plus the 535. Okay, so once again, this is my opening stock in units, right? Not value, units, plus this is my purchases, the units that I have purchased during the year, okay? Then, certainly, I know there was no return of cricket bats, so that's not a factor, but what happened? I have certain cricket bats left over. So, let's get that information. In terms of my cricket bats left over, here I go. I'm supposed to have 175. Okay, so remember, we're working towards 175 units that we have left over. Now, if we look at what we had at the beginning of the year, plus what we purchased, minus what we sold. That's right. How many cricket bats did we sell? Where is that information? The cricket bats that we sold was 455. Okay, so now, 455 was the number of cricket bats that we had sold. Let's do this calculation. Watch here. 110 plus 535 minus 455 gives me a value of 190. In other words, in terms of numbers bought and numbers sold, we had to understand that depending on this calculation here, we can see that let's do this in a different color. We had 110 on hand, 110 on hand, right, beginning of the year. We purchased 535 and we sold 455. In other words, in terms of our accounting records, we are supposed to have 190 cricket bats on hand at the end of the year, because that is what has been recorded. We find that in terms of our stock take, we have 175 units on hand. Therefore, watch this here, minus 175, and my answer is 15. What are these here? We are talking of 15 cricket bats that have gone missing. In other words, we have lost during this financial year a total of 15 cricket bats. In other words, these bats were stolen or theft or whatever else has taken place, but something has happened in our business. And this then leads on to the next question. Explain 2 control measures that she could put into place to avoid this from happening in the future. Right. Now, watch the integration in the curriculum. What are we doing now? We are checking your knowledge to see what internal control. Once again, let me start off with a definition of internal control. What is internal control? Remember, internal control, grade 12s, is there to protect or safeguard the assets of a business. So the purpose of internal control is to do what? To safeguard the assets of any organization. Right. And in this particular instance, what internal control, which asset are we referring to? We're referring to the asset trading stock, namely the cricket bats. Right. Now, what can we do? What measures can be put into place? Number one, we can ensure that more security is put into place in terms of the exit points. That means security at the tills. And what are we referring to here? I'm sure you've noticed that many a time you have like an electronic tag, Megan. Mm-hmm. Have you seen it on goods where they tag the item?
Yes.
And if it's not paid for or if it's not
Those
removed,
little things go,
exactly. You know, sometimes And you know how embarrassing it is. There's sometimes
tomato red.
Exactly. Tomato red is putting it mildly. Because guys, what happens is it beeps and it appears, and sometimes it's a mistake.
Yeah.
They scan it and they forget to take off that security tag. But can you see that if a business does that, what are they doing? They are protecting their assets because of theft, because of pilferage, etc. So what can we do in this business here? Ensure that we beef up the security at the exit points, namely at the tills. Okay, what else can they do? They can ensure that they have more regular stock takes. So if you increase the frequency of your stock takes, right? Because remember the question said, explain 2 control measures she could put into place to avoid this from happening in the future. We said that, yes, what could happen is we could ensure that we have more regular stock takes. Why? Because if we're counting our stock on a regular basis, it becomes easier to identify the value of goods that may be going missing. And what we can then do is put into place certain measures that would avoid this happening in the future. Right? Okay, so those are 2 control measures. I'm sure there are other things that you can think of. And yes, that is why you would find that in accounting, we have any acceptable answer. If your answer makes sense and it ties in with the question, definitely you would get the marks for it. Okie dokie. Next one. What's our next question? Our next question is, Anel is concerned about the way in which Chris has managed the cricket balls. Anel has found that Chris had changed the supplier of cricket balls in November without informing her. Okay? So Chris, you're doing things without permission. Right. Provide evidence from the information provided to support Anel's concern. State 2 points and quote figures to support your answer. Now, whenever a question says quote figures, they are expecting you to use the info in the question. Let's get into the question and see what we have. Right. The emphasis is on the cricket bats, the cricket balls. So let's get that in view. This is the emphasis. Cricket balls. What's the concern? She's concerned about how the cricket balls have been managed. Now, let's look at it very closely. If you notice that the price of the cricket ball was 60 Rand in May, it then went to 65 Rand in August, which is reasonable, okay? And all of a sudden, in November, the price goes up to 85 Rand. And then in December, it goes up to 95 Rand. Okay, you could argue that maybe because of the cricket season and all the other arguments. However, what is evident is the price increased from 60 to around 95 Rand. Remember, we had changed the supplier. So immediately, the price concern is a real concern for us now. What is my concern? The price of the cricket balls, we said it went up from 60 Rand and it eventually ended up at 95 Rand. So you can see, what are we referring to? We are referring to the price of the cricket balls that we are paying. We were paying 60 Rand, and all of a sudden, this has gone up to 95 Rand. You can see. Let's look at the percentage increase. Let's do that. We say 95 minus the 60 is 35. So 35 times 100 divided by 60, and you can see there's an increase of plus minus 58% in the price of the cricket balls. Surely cause for concern. But that's not all. What else is there? Let's look at this here. Look at the returns of cricket balls. Watch here. There's my return. The return took place in November, and the return took place in January. So in other words, we had to return cricket balls specifically in those months, November and January. And what do we know? We know that these cricket balls, there's it. There's the November one, right? And there's the December ones. So these cricket balls were actually bought from a different supplier. And prior to that, the goods that we bought in May and in August, those goods were perfect, hunky-dory, no problems with those cricket balls. Surely a cause for concern. On what? On the quality of the cricket balls that we are talking about. So our second problem would be the returns of the cricket balls, right? You would specify the month of November and the month of January. You can specify the value of those cricket balls that were returned. They were, what was the value? 5,300. And here you can see that you can actually quote the value. So the total, we're talking about the quality of those cricket balls. Remember, with the change in the supplier, it has resulted in us having to return those cricket balls, because surely there must have been problems encountered with that particular cricket ball. Okay, guys, we've worked very, very hard for you today.
An hour and a half.
We've gone into all the various questions. We've looked at the ways in which you can be asked questions on VAT, questions on inventory, and the works. So, we've done our part, Megan.
I think so.
More than our fair share.
Yep.
What we want you to do is now put pen to paper, engage these questions by yourselves. And remember, what do we always say? What do we say in our program when we end off? Guys, you have to aim for the moon, because if you don't get there, you're going to be a shining star. And in this case, Megan's shining star.
Yes, thank you, Mr. Accounting himself. Thank you, Mindsetters, for tuning in. The interaction on the page was absolutely fantastic. If you want and you take business, see me at 2 o'clock. From me to you, cheers and
Bye-bye.
bye.